We've acquired property, plant, and equipment. We've depreciated property, plant, and equipment. We've improved it, bettered it, maintained it, repaired it. It is now time to dispose of property, plant, and equipment. And there's a variety of ways that you can dispose of your property, plant, and equipment. You can put it in the trash. You can give it to donation. You could sell it. You could trade it in. So let's look at all those different ways to dispose of your property, plant, and equipment. So the first thing you have to do when you dispose of property, plant, and equipment is to update your depreciation through the date of disposal, because you've used it through the date of disposal. So update your debt entry so that you get all your usage in and record that. And then the second thing you're going to do is look at what is the balance in the asset that you're disposing of, what was its cost, and what is the current balance in the accumulated depreciation. You'll also want to gather what is the sales price or the cash proceeds, or get the receipt from when you dispose of that property, plant, and equipment. That way you can compute your gain or your loss, not your loss, on the disposal, which is the difference between the disposed of assets book value, cost minus accumulated depreciation, and the net value of the assets received. And as we said before, there's lots of different ways to get rid of your property, plant, and equipment. So let's take a look. So one way is you can retire it, which is a nice way to say you put it in the garbage. So here is your garbage entry. You're going to debit accumulated depreciation and credit the assets cost, and then whatever is the difference is debited to loss if it's not fully depreciated. So that is how you retire or take out the garbage. If you instead donate it, so you'll see those ads about donating your car or your truck, and they'll take care of everything. This is the entry to get that donation or that charitable deduction. You debit accumulated depreciation for the balance in that account. You credit the asset for its cost, so you get the asset and its associated depreciation off your books, and you put the difference or debit donation expense for the difference. Well, I'd rather sell it, so let's look at how you sell. So when you sell, you debit cash for whatever the cash price is or cash proceeds are. You also debit accumulated depreciation for the balance in the accumulated depreciation account through the date of sale. You credit the asset for its cost, and then you'll either debit a loss if you need a debit, or you'll credit a gain if you need a credit to make that entry balance. Another way you can do it is you can trade in your property, plant, equipment for either similar assets or dissimilar assets, meaning you trade in a car for a car. You're not trading a car for a goat. That would be a dissimilar, or a car for a boat instead of a goat. Those would be dissimilars. So what you do is you treat it as if it's dissimilar, you treat it as if it was a sale, and then acquiring the second asset. If it's similar, it's a little bit more complicated and probably beyond the scope of this class. So let's get some examples. Here's an example. We have an asset that costs $10,000. It salvages $2,000. After 4 years of straight line depreciation, accumulated depreciation has a balance of $8,000. So if I'm giving it to the garbage man, I'm going to credit the auto for its cost. I'm going to also get rid of the balance that's in accumulated depreciation, and I say that entry does not balance. So what do I need? I need a plug that's a debit, so that's a loss on the retirement or the disposal of $2,000. So notice the loss is the plug, or the difference. If I sell the asset for $3,000 cash, I receive cash of $3,000, which is its sales price or cash proceeds. I get rid of the accumulated depreciation. I get rid of the auto. So the auto and its associated accounts are off my books. I have received the cash. I say, does that balance? And it does not. I need a credit to make it balance. So I'm going to plug a credit gain on sale or gain on disposal of whatever it takes to make that entry balance, which is $1,000. Here's another example that uses double declining balance, so it's a little bit more complicated. The cost is $25,000. The salvage is $5,000. Has a useful life of 5 years. Double declining balance was used, and so the double declining balance rate is 40% a year. So we have depreciated it either for 3 years, which would be $19,600 accumulated depreciation, or we'll have depreciated it 5 years, which would be the $20,000. So that's how you compute the accumulated depreciation. So let's see what we do either in year 3 or year 5. So the first thing we do is we're going to scrap it after 3 years, which assumes that no cash is received. So we said the accumulated depreciation after 3 years would have a balance of $19,600 using double declining balance, and you'll credit asset for its cost, and because you received nothing in exchange, instead you gave it to the garbage man, you're going to have a loss for the difference. What if I scrap it after 5 years? Well, then my accumulated depreciation would have had a balance of $20,000, and I credit my asset for its cost, and the loss would rise to $5,000 because that's what I would need to make that entry balance. If instead I sell it for $8,000 after 3 years, notice the accumulated depreciation debit and the asset credit stay the same. I add in that I received cash of $8,000, and so now I look at this and say, what do I need, debit or credit, to make this balance? And I need a credit for $2,600, and since it's a credit, it will be gain on disposal or gain on sale for $2,600. And finally, in D, if after 5 years the equipment and $28,000 cash are traded in for a dissimilar asset with a fair market value of $30,000, I'm going to record, sorry, this is written in the middle of it, I'm going to record the new asset at its fair market value, $30,000. I'm going to get rid of the old asset and its accumulated depreciation. I'm going to pay cash of $28,000, and now I say, what do I need to make this entry balance? I need a debit of $3,000. So because I need a debit, it will be a loss of $3,000.